It's not that easy to run a credit analysis in Brazil. I wouldn't say that it's just a Serasa score or just an SPC score. It tends to be a lot of different factors in one big cake for you to make a decision. Sometimes I'm one of 5 women or one of 10 women. So even though it's been, I'd say, very slow, it hasn't happened in the last 3 years for me to go to a fintech event and be the only woman founder there, which is, I think, fantastic. I see that things are changing.
Hello and welcome to Brazil is Not for Beginners. Today my guest is my good friend Rebecca Fischer. Rebecca is a co-founder and chief strategy officer at Divibank, a leading platform for online businesses in Latin America that offers payment solutions and access to capital. Rebecca, thanks so much for joining me today.
Thank you for having me, Isaac, and thank you for everyone who's tuned in.
Yes, we were talking beforehand, and I was hoping that I was your first podcast, or at least English language podcast, but it seems that you are popular and have done these before, but I'm your first podcast with a person named Isaac, so I'm going to take that to the bank.
Yeah, you're also my first podcast this year.
Well, it is early in the year, so glad to know at least that we're getting started well. Hopefully many more after this. But Rebecca, for those who don't know you or are not familiar with Divibank, can you introduce yourself and tell us a little bit about your journey up to this point in creating Divibank?
Sure, of course. Well, prior to Divibank, I worked for over 10 years in the digital marketing space. I started off in the United States where I went to college. I eventually came back to Brazil. I went through a series of agencies and later SaaS platforms, and my focus was always on scaling and growing e-commerces and other digital platforms. And I guess my desire to become an entrepreneur really started happening once I was at Kenshu, which is now called Sky. And there I had some really big accounts reporting to me. I had some accounts like Nubank, I had iFood, I had Quinfondad, I had Mercado Livre, and I was helping them all scale for around 5 years. And at the same time, I had a lot of just smaller e-commerces, which over the time I was there grew a lot, but just never at the same speed and scale, which I saw these startups growing at. And it started really bothering me. And I started becoming really curious about what makes a company grow really quickly and why do some companies take longer than others. And then I started seeing the intense correlation there really was between some of these clients getting massive investment rounds and, bootstraps founders not having the same sort of access to capital. So that started really something ticking in my mind, started thinking about that.
Amazing.
And that's when I really started thinking about how can maybe I help startups and other small businesses grow in Brazil in a way which is easier, which culminated to the idea, which I guess was our first iteration of Divibank. So we founded Divibank in March 2020, which I guess looking back was...
Who's we?
We, Jaime Taboada, my co-founder, and I, we started off in the first week of the pandemic. We didn't know it was the first week of the pandemic back when we started it, but it was an exciting time to start building. So we were really able to hunker down and see how we could enter this credit lending space with our first product, which was digital marketing loans for small and medium businesses. So we would basically, pump money into your Facebook account or your Google account and charge via a revenue share model. We were the first doing loans this way in Brazil, so we really had some regulatory hurdles to overcome and make sure we were doing everything properly. And we operated with this first product basically from 2020 on. We started going into inventory loans and also recurring revenue loans. And since the middle of last year, we also launched our payments product with payments orchestration, because really it was something that we saw that we understand e-commerces now. They're our total core to work with them. And we've seen that, you can help a company scale, but if a company's paying high fees when it comes to payments, or if a company has approval issues because of anti-fraud being a little bit too good, I guess, and barring too many sales, that can really hurt their bottom lines also.
Really, really interesting. You touched on a lot there of what I want to get into, but I think you gave a really nice introduction and we can dig a little bit deeper. So tell me a little bit about how you met Jaime, because I think that was an interesting story when you shared that with me. So kind of 2020, I think it was, you said that you started thinking about this idea. And how did you meet your co-founder? He is also a gringo, from what I understand, correct?
He is also a gringo. He's a Colombian gringo. I actually met him in October of 2019. We started the company in March 2020. I met him because I'd been talking about this company idea maybe for a year or two with friends, but I didn't really know how to get it off the ground. And eventually one of my friends from Georgetown, where I went to college, who happens to be Colombian, he's like, this Colombian guy, he just arrived in Brazil and he's an EIR at Maya Capital right now, and he's thinking about things to do. And he came talking to me about the exact same thing you've been talking to me about, and I really think you two should meet. So we went out for a drink, we hit it off, and from then on, we were just constantly talking about it. And that's when I decided to make the jump into entrepreneurship.
Amazing. The way that founders meet is really interesting. I think that you have the cases where people, as was my case, went to school with somebody or they worked together for a long time, but you kind of just dove right in with I guess you guys got to know each other and dated for a little while before you got married in the startup sense. But I find that really interesting. So, you talked a little bit about your background kind of helping e-commerce scale and helping digital banks scale, digital platforms. What was the problem, if you could take a step back, that these small e-commerces were facing? So if I understand it correctly, it's a lot about, at least your first product was a lot about the challenge of working capital and being able to buy digital media where you don't have credit or you don't have the cash flow to purchase it with. Is that correct? Sure, you could do a better job than I can of summarizing your problem.
But yeah, that's pretty much it. What I saw was happening was that for especially, when we're even thinking about like retail e-commerces, if they know how to operate their ads properly and, they've been doing this for a while, they know what a dollar or a real, I guess, in their case is going to bring them back in sales and in revenue. So when they think about investing in digital marketing, ultimately they're just pulling a lever to up their revenues and they know exactly what they're doing. But that's not always so easy to do. Sometimes on Facebook, you pass through their credit score and credit check and you get to pay 60 days after you run your ad campaigns, but that only happens after a while and after you're well known and you invest a lot. What happens for most companies is that they have to pay a boleto, basically like an invoice at the beginning of the month, and front all that money onto the platform. So what happened a lot is that they simply didn't have the working capital necessary to run campaigns online. It's the same thing that was happening with inventory. For them to order their inventory, sometimes they have to pay their vendors, even if it's only a percentage, 30 or 50%, they have to front that sometimes 60, 90, 100 days before, that even gets on their shelves to sell. So really it was a chicken and egg position where they really couldn't grow, even though they knew exactly what they had to do to grow because they didn't have access to the capital. And they had difficulty going to traditional big banks and asking them for this because there wasn't exactly a financial product which was focused on growth specifically. Many times these working capital loans, they're very long. They maybe have like 24 or 36 months tenure. And that's not what you need necessarily if you're just doing a digital marketing campaign. You know how much you're going to sell. You know how long that inventory is going to take to get to your client. And you don't necessarily want to be paying interest on top of that for a long time.
Yeah, and my understanding of a lot of the e-commerce is it's a quick turnaround as well, right? It's not something where you're waiting. I guess the time from buying inventory, making your product, putting it online, advertising it, and selling it is pretty quick, right? You're talking about 30 to 60, 90 days in the end of it as well, right? So it really is just that short-term cash flow. But can you talk a little bit about the credit market in Brazil? I think that you touched on it a little bit here in talking about how the banks are not doing a good job of attending to the needs of these, at least these e-commerce companies. And I think credit's really confusing for foreigners as you look at Brazil. So, obviously there's the personal credit side where historically you had kind of nome sujo, which is kind of a negative credit rating as opposed to, I think, what a lot of foreigners are used to, where you're thinking about a positive credit rating where, in the US, you have a FICO score and it's based on your ability to repay debt. I think Brazil is switching to that now. You also have the FIDIC. I always joke around what the fuck is a FIDIC because it's complicated. I don't think it's as complicated as it seems, but it seems a little bit opaque. But can you talk a little bit about the credit market and even some of the hurdles you guys had to jump through initially in offering credit to these businesses?
Yeah, of course. I mean, when we think of the credit market, it's what you said, they're the personal loans and they're the business loans.
Yeah.
And sometimes these are quite intertwined, especially when you're a small business and a small entrepreneur. What we saw a lot of the time were people getting personal loans. And I think Credita's opened this up a lot because you could give your car as a guarantee for the loan. So we
Oh,
did
wow.
see a lot of entrepreneurs who were getting personal loans and then using that money to finance that company. So that's just a very complicated system to be inside. There are also the working capital loans. Some are more specifically focused on inventory. Others are a little bit more open, but it does tend to be an open working capital loan. They don't tend to be, especially for small businesses, the banks don't tend to look exactly where this resource is going to, which also does tend to make the loans a little bit more expensive. But let's go into why loans are expensive in Brazil. I think that's a huge chapter to go into. So I think you started touching off really well with how does credit market operate in Brazil? And you're exactly right. It's traditionally rooted in negative credit information. So, we'll have the credit bureaus here, which are Serasa, we have Boa Vista, SPC, and they track things like unpaid debts, defaults, I guess bounce checks back in the day, that sort of stuff, negative events. And that tends to be the data which helps not only banks, but even businesses, loaning to each other, have like the most significant role traditionally determining whether you get a loan or not. The Cadastro Positivo, which I guess is the positive credit registry, which is going to track your on-time payments and everything. That's a little bit more like the US. That's only picked up in the past few years, and it's still not the primary source of information which banks are looking at. And I think a key difference in Brazil to the US is also that people's credit worthiness is not easily captured only with the single score. Your score can drop dramatically if you forgot to pay your phone bill, and maybe like forgetting to pay 80 reais doesn't mean that you're huge risk of default. We have some things like that. So we look at that score, of course, there's a lot of correlation in there, but it's not necessarily the whole picture. So banks, fintechs, other businesses also look at analysis such as not only the bureau data, but maybe income verification. We look at, we want to know who the founders are for these companies. So we are looking at their tax filings, for example, or employment status. And fintechs, especially, one thing we looked at a lot was even personal relationships within the company, and who the personal relationships are close to the company, because you want to understand who the founders are, who are close to these founders, if this is a fraud risk, which is a huge problem in Brazil also. So it's not that easy to run a credit analysis in Brazil. I wouldn't say that it's just a Serasa score or just an SPC score. It tends to be a lot of different factors in one big cake for you to make a decision.
Yeah, I think that there's also a lot of, I don't know the right terminology here, but there's a lot of informal things that happen. There's a lot of data that goes unreported that can be really valuable. I mean, you mentioned that in terms of knowing who the founders are and where their income is. I think that there's been a lot of innovation in the credit space, for lack of a better word, but it still has a long way to go. I think the Cadastro Positivo is a step as well, right? Trying to get some of this positive credit data. But it just seems like there's a lot of things that go uncaptured. In terms of when I was dealing with Teddy, it was also a lot of, we decided not to go into credit lending, but you see a lot of people in the gig space, and there's a lot of people that are maybe underemployed or have multiple employment sources and multiple sources of income, and you can't really track them, or it's cash based or it's PIX based. And so you have a lot of these flows that are hard to characterize in a simple model. Not that Serasa is a simple model, but hard to capture in a model. And I think that really influences as well how credit is so hard. And so I'm curious, and I want to get into, you mentioned some of the other things that Divi is also doing, which I think are super relevant to what we want to talk about and what you and I talk about when we're not on this podcast as well. But what has it been like running a credit startup in Brazil? And maybe how has that influenced also kind of some of the decisions that you've taken in terms of where you're heading with the business?
I mean, as you said, you have to be creative in Brazil when you're looking at a credit score and credit analysis. So I think running a credit startup in Brazil first, I'm a creative person, and I think it's been actually great for my creative outlet, because it's how do we start analyzing other factors which maybe our competitors aren't looking at, because a bit of it also is if you have your own proprietary credit model, something has to be great about it. Something has to be a game changer. So it's what you said. Many entrepreneurs will have maybe 2 or 3 CNPJs, which are, the business registries, because they know that if they start making more than a certain amount of money on one, their tax bracket goes up and they don't want to pay more taxes. Another thing which we also realize is that many times fraudulent companies, they tend to use the same accountants, because not all accountants want to sign fraudulent balances. It takes a certain kind of professional to sign off on that. So it's interesting other things that we get to look at.
That is an interesting one. I like that. The accountants, you have to find the right bad accountant. That's something that's come up on here before in terms of spend money on the right accountants, but it seems like maybe don't spend money on the wrong accountants, as it becomes a little bit of a stigma.
Well, I mean, it depends what you want to do, I guess. It depends what direction you're going. But yeah, your accountant helps you or not a lot in Brazil. In terms of the credit market, you also asked, what the fuck is a FIDIC? Like, how does this element work? At Divi, well, we never had a FIDIC. I think it's worth talking about because it is a very interesting instrument. So FIDIC, which I guess is FDIC, which is not related to the US FDIC, which ensures the bank deposits, is what we're called the Fundo de Investimento em Direitos Creditórios. It's basically an investment vehicle which focuses on credit receivables. So it's a structured fund. It allows companies to securitize their credit rights, such as invoices or credit card receivables or even loans that they've issued, which I guess would be the case in a credit fintech. And you sell these off to investors. This provides liquidity for the company, and it gives investors a fixed income investment. And it's really tied to the performance of those receivables. So it's something which tends to be quite simple to set up. It doesn't necessarily require a massive amount of investment upfront. And it tends to be the easiest form, not only for the fintech to structure themselves, but also for investors to have just an easier form of investing in these larger debt vehicles.
Yeah, I think the FIDIC is really interesting because it is a way for, maybe not quite retail investors, but smaller investors to have access to kind of a diversified instrument. But it's also something, if I understand it correctly, like you said, you don't need a ton of money, but it's also something that's not really available to the smallest businesses, at least the ones that you're working with. So it is something where I guess an intermediary needs to be in place. So it needs to be kind of a mid-sized or large business or a fintech that gets a Fijique and uses that as lending capital. Is that correct?
Yeah, that's exactly it. I'd say that today, smaller investors, retail investors even, many times can access Fujiki via platforms to invest in the Fujiki and reap the returns from them. But it's not something that a small business necessarily could access. So one thing that we do see sometimes these medium-sized businesses or larger retailers wanting to give credit to their clients in some way. So you sell maybe agricultural items and that maybe like a tractor is going to cost maybe $1 million to your client. So you want to be able to have that line of credit. And we do see some of these companies now starting to partner with fintechs to be able to set up a Fijiki, but it's still not a very common practice.
Okay. No, it's one of these things that it's just different when you look at the market. And so curious about it. I think we'll have to do another episode to go deeper into the Fijique and how you structure them and what their purpose is. But you also mentioned at the beginning when we were talking about Divi and kind of how you founded it, the move into payment orchestration. And so I am a bit of a payments nerd, as you know, working it in my day job now. And Brazil is really known as a leader in payments and payments innovation, things like Pix and Drex is coming. Can you talk a little bit about the move into payments and what were the challenges that you saw your customers facing? You mentioned the high costs, things like fraud. The name of this podcast ties to that very well because fraud is not a minor issue in Brazil. Can you talk about what were the challenges that you were seeing that made you move into payments and how you're trying to address that?
Our move into payments was actually a pretty simple decision. We interviewed maybe 50 or 60 of our customers, and we asked them, just those standard questions you're asking your customers, like what's keeping you up at night, what's not working, if you could change something in your company, what would it be? And the number one answer we got pretty much across the board was that all of them were unhappy with their payments providers. They all thought that their rates were too high. They all thought that the customer service was terrible. And they all thought that the anti-fraud in many cases was rejecting more sales than they thought it should be. They saw sometimes that customers who are repeat customers, they knew who these people were getting their sales rejected. And, in the moment you put your credit card through as a consumer 2 or 3 times into the payments platform on a website and you can't go through,
Like give up.
yeah, you give up. You don't come back and you're still mad at like the retailer as if it's their fault also. So they were losing a lot of money. We see that in some sectors, especially the most underserved sectors in payments, such as agrotech, they sometimes only have 50% approval rates on their credit card transactions. So we see how much money really is also being lost. So the idea of payments orchestration for us really went into, what are the 3 things they're complaining about? 1, high rates. 2, bad customer service. And 3, too much rejection on the anti-fraud. So in terms of high rates, what we've been able to do is that our GMV is, we're not a small e-commerce. We have the total GMV of many customers put together. So we're able to negotiate better rates than maybe a small business will be able to do on their own.
Sorry for cutting you off, but just a couple terms that maybe the audience might not be as familiar with. So what is GMV and maybe also what is payments orchestration? Just, I know I used that term
Okay.
first, but people that might not know what those things are.
No, fair enough. GMV there are ways to define this, but it's basically revenue. And when I speak about revenue, I mean about my customers' revenue. So I mean that everything that all these, e-commerces are making daily on their websites. And when we talk about payments orchestration, the easiest way to think about it is really just having control over which payments platform or sub-acquirer is going to be processing your transaction at that time. The way I like to describe it, and I think this is a very Brazilian description, so maybe foreigners would understand it, is when you go to a padaria or to like a restaurant here and you get your credit card out, you say, I want to pay my bill, and the guy has like 5 different machines, and he sees that you have maybe an Amex at that time, and you want to pay debit, and then he chooses which is the best machine for him, and he gives that machine to put your credit cards through. That's basically what payments orchestration is in the most low-tech sense of it. It's the same thing that happens when, these small businesses, they want to receive in cash and not credit cards because they don't want to pay fees. That's also payments orchestration and sort of like an offline version of doing it.
Right. So you orchestrate, right? That's the easy word, but you direct the payments to where the merchant gets the highest approval or the best rate or whatever it is that they want from you in that moment that you've defined with them. And you kind of sit between and direct that. So I didn't mean to cut off your train of thought there in terms of what moved you into payments orchestration. So you said you're working on these kind of 3 levers. And so moving into payments orchestration to help your small business client.
Yeah, to pay less fees, to have like more of their revenue be actually their revenue and not a payments expense, to have better customer service, because when you're a small company and you have one of these big payments platforms doing your payments, many times you don't even have a real person who you talk to. and you're just talking to, like an online customer support, and e-commerces are 24 hours a day, right? Your store never closes. If someone's trying to buy something at 4 in the morning, that has to go through, even if there's no one awake at your company at that time. So you don't end up having a lot of support. And our third pillar truly is, having higher approval rates. Because what happens today is if you have a website, oftentimes you only have one payments provider. And, if they reject that transaction because for some reason they believe it's fraudulent, we'll send it through to someone else. Maybe they're going to charge you a little bit more, but maybe they'll approve that also. And, having that additional cost vis-a-vis the revenue you're going to get is worth it for the retailer. So those really are the three pillars that we've been looking into at the moment.
Awesome. So one of the other things that you also mentioned is moving into PIX initiation. So I think people that are listening to the podcast are maybe familiar with PIX, which is the instant payments, really be the equivalent of a government-sponsored Venmo, but you're moving into PIX initiation. So maybe you can explain what that is a little bit.
Yeah, exactly. So having our checkout solution now means that not only do we offer PIX in the traditional sense of PIX, but we also have a new modality which is called Iniciação de PIX, PIX initiation. It's just been launched by the central bank. And it basically is just a faster, more seamless experience for the end consumer. So what happens today in Brazil, if you buy something via PIX online, is that you'll buy it and then you have to copy paste your PIX code and put that into your banking app to be able to pay for your purchase. And that's not always a seamless experience. Many e-commerces lose sales because of this. Because if, for example, you were buying something on your desktop computer, your banking app's not there. You're gonna have to copy paste that, maybe email or WhatsApp it to yourself. And you leave work, you forget to pay it. There's a series of issues which make it not as efficient. What Iniciação de Pix does is that if you choose to pay via that Pix modality, the moment you hit buy, it'll open your banking app and you'll scan your Face ID or whatever security measures your banking app requires of you. So it is a safe solution. This is entirely central bank sponsor, and your purchase will be there. You just have to give it the okay. So you go down from maybe having to take 15 actions to finally pay your Pix to maybe only having to take 2 or 3. And that really increases conversion rates for online retailers.
Yeah, shopping cart abandonment is a real thing when you're buying online. And I'm doing some work on some other things, but the user experience is really important in this, right? And so number of clicks, number of pages, number of steps is really important. And you can keep that down. And I don't know how many people that are listening have made a PIX payment online, but it is not the easiest solution right now. I think PIX is great when I'm in my banking app sending you money. There's other areas where there's a lot of opportunity for improvement. And this is definitely one of them.
Exactly. And small e-commerces, they want to push more sales on Pix because, they don't have to pay MasterCard or Visa anything when you're buying on Pix. So for them, it's a really interesting solution.
Yeah, I think without getting too much into payments, it's really been eating into debit specifically, but it's going to eat into credit increasingly, especially when you get things like the installment payments and stuff like that. So I'm hoping to have an episode specifically on Pix coming up, working on getting a cool person to talk about that. Coming back to your experience as a founder, as somebody that was educated in the US, worked in the US, and is now working again in Brazil, or has been working for a long time in Brazil, but has a startup in Brazil. You have a number of international investors in addition to, you mentioned Maya at the top as how you met Jaime, but what has it been like working with international investors in Brazil? What have they seen in Brazil? What do they like about Brazil, and what have they struggled to understand? What have those conversations been like?
Well, I think that, the international investors who I've worked with, which have been international investors who have invested in Brazil specifically, so I think there's a little bit of bias in my answer, but they really do understand that Brazil is a huge market. One of my investors once told me there's 2 Canadas in Brazil, and that's why I invest there. And I thought that was an interesting way of looking at it, just population wise. So it's a huge country. There are a lot of people living here. It is still somewhat, if not massively underserved, depending on the sector you're in technologically. So there's a lot of opportunity. And when we look at Brazilians, the people in Brazil, these are digital adopters. These people are very connected. They are very online. When you look at data related to cell phone use in Brazil, it tends to be a top market globally. When you even look at where Meta, for example, where they do their tests, so just like, if they want on Instagram stories or something for there to be a new sticker or something, their test market tends to be Brazil because of how quickly people adopt new technology in Brazil. Pix, as you said, is another huge case study for this. The Pix adoption was in 2 years, it just completely destroyed the debit market, for example. So it's something which Brazilians are very interested in everything technological, and it is a country which has a growing middle class still over the years. So it's something which there is a very strong return potential long-term in Brazil due to everything I just said. I think that foreign investors investing in Brazil, there's also a lot to learn. I think while we are a market which behaves more like the US than perhaps the European market would, It's also a country with enormous economic volatility. It has a lot of cultural nuances still. It is a very relationship based culture. You don't close a deal without having that personal connection. There are super complex taxations and regulations. As you said, Brazil is not for beginners for a reason. And I think speaking specifically to fintech, it still is a very fragmented credit and payments market, which I think is a massive opportunity, but it also is a massive hurdle when you're looking to build.
Yeah, that makes all sense. And I think all things that have come up before on this podcast. You and I also, we've obviously become friends over these few years, but see each other at events related to fintech and related to startups. And you tend to be one of the few women there. And you actually posted about this not long ago on social media about the decline in the number of women founders. And I think that was from a global report. But I'm wondering if you can talk a little bit about what it's like being a female founder and a female fintech founder, and what it's like to be one of the few women in that space, and maybe offer some advice to women looking to break into these spaces or people looking to work with women in these spaces, investors and founders alike.
Well, I don't know if you remember that first event we ever met at, I was actually the only woman
Yes.
at that event.
But Andrew introduced us because we were both Jewish, and I had a dumb idea that was tied to that. And Andrew, Anyway, yes, but you were, I think, one of one or two women there.
That's true. Someone else appeared the other night, but I was the only one. And I think that was actually one of the last times that ever happened, which
Okay,
I think
great.
is why I remember that night so well. Sometimes I'm one of 5 women or one of 10 women. So even though it's been, I'd say, very slow, I would say that it hasn't happened in the last 3 years for me to go to a fintech event and be the only woman founder there, which is, I think, fantastic. I see that things are changing. The report I published on my LinkedIn is for PitchBook, actually a global study they did on, how female-led companies have had less investment. I do think that there's two sides to that coin. I think there's obviously an inclusion issue, but I think also with the economic volatility that we've had in the past 24 months, many women don't tend to take the jump from their full-time jobs to entrepreneurship when they're not sure that we're at such stable times. So I think that it really is how to get more women into entrepreneurship and founding markets. When waters tend to be a little bit more choppy, it does tend to be a little bit more difficult for people to make the jump, which is very understandable. Women have, massive responsibilities many times with their families and other personal commitments. But I think, start creating a network early. I think that's a great way to do it. There's also an incredible amount of men just like you who, are willing to help and hear and be friends with. I don't think that it's the boys' club that maybe it was painted to be before I entered this space. I think that it is entrepreneurship. Entrepreneurs in Brazil, you have to be crazy to be an entrepreneur in Brazil. So, you get all these crazy people together and they're looking to help each other, which I think is great. And I think join networks. I currently help out with Female Force. So I think to any women listening in Brazil who looked for more entrepreneurship advice, that's a great organization that you can start talking to once you're thinking of founding a company or if you have a very early stage company. Rede Mulher Empreendedora is another network I help with also, and that's also a great place to get started if you're looking for more women in this space to exchange some ideas with.
I like the way you put that you just kind of need to be crazy. I'm obviously not a woman and so don't have the ability to fully relate, but I think that entrepreneurs in general in Brazil do try to help each other. I've been really impressed at how the market takes to people trying things. And these types of events, at least the last 2 years, I think that the choppy waters have also maybe, I don't know if I'm maybe reading into it and it's just the circles that I'm going to, but I'm also happy to hear that there's more women at these events and more people that are equally crazy in terms of jumping in and trying different things. You talked a little bit about this before when I asked about Brazil and the international investors, but Brazil is known for its fintech leadership. And you mentioned kind of the fragmentation and the opportunity there. And why does credit and payments alongside that, why do they still seem like such an opportunity that people have been building in these places for, a number of years? What is it that makes them hard to tackle? And what are you excited about in terms of some of the innovations and regulatory changes that maybe will help them finally get tackled as opportunities?
Well, I think that in the same way that, now we say that payments and credit are still markets which are underserved and can evolve, I think we can look back 10 years and, Nubank, we already did Itaú, we already had Bradesco. So I think the truth of it is that nowadays we have more data and data makes decisions easier to make. And it makes parts of the population that before could not be served to become economically viable in many ways for these institutions. I think that older companies, the legacy systems they have, I don't think they necessarily know how to serve e-commerces. Recently, I was speaking to a friend who does the loans for one of the big banks, just working capital loans for small businesses. And she says that in their paper form, which is one of the forms they have that they send out, you still have to put like the address for your brick and mortar store, which doesn't exist for so many of these companies. So it shows that there is just really this barrier. And she can't untick that box inside their legacy system. So there's nothing they can do. And if you don't have a brick and mortar store, you're going to have a lower credit rating inside, and that's going to make your interest rate go up. But there's this huge snowball. So I think that there's definitely a lot of opportunity there just because the big banks didn't necessarily innovate for the space and have not necessarily been giving these small companies the customer service that they've come to expect and that they deserve. In terms of things that are exciting coming up, I think that Pix has so many modalities now also. There's going to be the Pix recorrente. So basically, if you have just sort of like a subscription product, you're going to be able to charge via Pix on that, which I think is very interesting also.
Yeah.
That's something which was traditionally occupied by credit cards. And now you're going to be able to do that in the debit modality. Everything that you said coming up with, buy now, pay later via Pix, that's something which has been evolving a lot. I think the tokenization, which Drex is bringing, is also very interesting, being able to tokenize necessarily no loans. I think for the FIGIX, when you do that episode, that's definitely something to look into, having these tokenized CCBs, which are the credit titles that you have today for business loans. That's going to be something really interesting to work with in the future also.
Yeah, I think you made a good point there when you said, look back 10 years and how much it's already moved. And I think that maybe when I think about Brazil, I think about it from that perspective of the first time I lived here and how much easier and better it is than in 2012 and 2013. And the amount of time I spend in a cartório now compared to when I did then. And some of the things that are just easier, and being in the payment space and being so close to it, I think that you also see some of the evolution, and clients regularly ask me about Brazil as kind of an example. And you see all of the competition in the payment space versus it was, for all intents and purposes, a duopoly 12 years ago with just a MasterCard acquirer and a Visa acquirer. And now there's lots of folks doing this, and not a terribly high barrier to entry. I mean, I think it's a high barrier to being good, but not just to starting something. And so I look at it, again, a bit of a payments nerd, so I'm excited about what's coming and where the market's going. One of the other things, you talked a little bit about it when I was asking about international investors and some of what they don't understand. And I did a podcast recently where I was asked, why I built in Brazil. And obviously I'm a gringo, so it doesn't make as much sense. But you went to school in the States and lived there for a little while and worked there. And you obviously speak great English and have that ability to be abroad. What is it about Brazil that's keeping you here? Why are you building in Brazil?
I mean, there's that saying in Portuguese of Brasil é o país do futuro, Brazil is the country of the future. And I do think that there is a lot of truth to that. I do think that with the size of the workforce and the labor force we have here, the size of the potential economy we have here, that there are still a lot of opportunities to be had. I do think also that innovation brings a lot of good to a lot of people. So as I said, being an entrepreneur means that you're probably crazy. And it's really hard to be an entrepreneur. So I think the core of Divibank always really has been, how to make entrepreneurs' lives a little bit better, because there are so many regulatory challenges. Taxes are just crazy in Brazil, as I'm sure you know. So, anything that can make it a little bit easier to generate jobs, generate income, have more people working, have the country be more productive, I think is a great way to give back also.
You skipped the second part of that quote, though. E sempre vai ser, and it always will be. That's the challenge of Brazil, is it's got this great potential. I'm rooting for it. I'm fully invested, obviously, being here. But it does offer all those opportunities. I think that's what makes it really attractive. And I think for the people that are there for the long term, there is opportunity. What advice do you have for founders looking to build in Brazil? So obviously they need to be crazy. How do they maintain that? What do you suggest to them? What lessons can you offer to make their path a little bit easier, other than obviously going to Divibank for payment orchestration and capital needs?
Yes, and listening to Isaac's podcast to learn great things about entrepreneurship in Brazil.
Thank you.
I think learn to be okay with hearing no. I think that's something which I've told a lot of people. So many people talk about how much, running a business, there's a lot of failure and everything, but there is just like so many hurdles you're going to find, so many no's, which are, just like taxation no's, regulatory no's, or no's in terms of labor laws and everything. And I think, don't use that rejection or those barriers to bring you down, but use that really as fuel for creativity. Because I think that's where a lot of the best ideas that have come through in Brazil have been really people who are frustrated of hearing these no's and frustrated of having these barriers, and have built something which is really interesting and changes a lot of people's lives. So I guess my advice would be using that rejection and using the challenges as fuel to build more.
I just finished reading The Obstacle is the Way, one that I heard recommended by a bunch of people. And it's about the Stoic philosophy of using challenges as opportunities. And so taking the no and turning it into a learning experience and going forward. And I think that's really important as a founder. In a lot of ways, it's a numbers game, right? It's talking to enough funds, it's talking to enough companies to get the experience that you need or get that one yes, and finding that. And like you said, you need to be a little bit crazy to hear no so many times and keep going forward. Do you have any advice for foreign investors looking at Brazil?
Start building relationships. I think yesterday was probably the right day to start building relationships. And I guess if you missed that, start building today as the second most opportune date. I think that, as you said, the founder community in Brazil, we're very open. We help each other a lot. And those doors do open so quickly when you know the right people and you start building relationships. And Brazilians, they want to know where you live. They want to know what you eat. They want to have like that second layer of connection with the people they work with and the people who invest in their companies. So I'd say come to Brazil, actually go out to lunch with people. Zoom calls are not enough for you to fully understand the culture and fully create those connections. So my advice is just come to Brazil and meet people.
That's good advice. Get on the airplane and come down and hang out. Heading towards the end here and wrapping up, what does the expression Brazil is not for beginners mean to you?
The expression to me, it means that there are some insurmountable hurdles. And sometimes only a Brazilian knows how many hurdles there are behind the hurdles that you've just jumped over. So I think it's a bit what we've spoken about, that sometimes you think that there's only one or two layers to the problem, and it's so many. So I think a little bit is about just like the wisdom which Brazilians themselves have about the culture, about the economic situation, about business culture here also, and how, if you don't have someone showing you the ropes, it's probably going to be very hard to be successful.
Yeah, I liked that. Peeling the onion, right? And seeing all the layers that are there. Are there any particular expressions or habits? You mentioned Brazil, país do futuro, and you and I talked about how kid-friendly Brazil is. But are there any Brazilian expressions or habits or anything else that you'd highlight for a foreigner for them to not be surprised at when they come down here or to get a sense of Brazil?
There's one which I always remember this one because Jaime, my co-founder, when he learned it, he was like, is this something that you really say in a business environment? Which is especially when I guess we're speaking to salespeople or motivating the team. And it's really about like, let's get our energy together, let's go, which is faca na caveira, a knife to the skull, which I guess has a little bit of like pirate imagery. It's a little bit violent, but I think it's a great Brazilian expression about just like how bloodthirsty in a way Brazilians can be for success. And when we're motivated, we will stop at nothing. So that's an expression which we use a lot here, especially when we're trying to like motivate the team and have things move quickly.
What has it been like working with we skirted around Jaime a little bit, but what's it like working with a gringo founder?
I think being a Colombian makes Jaime maybe only a half gringo founder. I think what I've learned speaking to him is that Colombia has so many of the similar problems that Brazil has in terms of, I guess, everything fintech, everything social. I think they have the downside of being a smaller market, so they attract less foreign investment. And it's a little bit harder for a Colombian founder to start in Colombia, even though we do see some huge Colombian fintechs. But I do see a lot of Colombian founders in Brazil also with very successful businesses. But I think it's also been great for the team actually to have just access to other cultures and other work environments. So it's something that we've always really valued at Divibank, which is recruiting a little bit from abroad, because many Brazilians are never going to have a study abroad experience or be able to get a master's degree in the US or something. And it's a way that we find that this sort of cultural exchange at work is very valuable because, well, Brazil is a very diverse country. I guess that's why there are so many valuable aspects. And the more diverse I think we can be within the company culturally, it makes us also stronger as a team.
Very cool. There are definitely a number of Colombians in Brazil founding companies. The Rappi Mafia that came over and started Rappi here, but I think other people as well. And you've obviously seen some of the biggest of the startups in Brazil were started by non-Brazilian founders. And so wondering if there's also an element of not knowing that Brazil is not for beginners, or not knowing why you can't do it, not knowing all the levels of the onion. So,
Yeah, ignorance is bliss sometimes, I guess.
yeah, well, you don't know. A lot of founders say that, right? If I'd have known how difficult the problem would be, I wouldn't have actually started it because you didn't know how difficult the problem would be to get there. But Rebecca, thanks so much for coming on. This was great. I always love our chats. Unfortunately, this one was not over gin and tonic, but the next one will hopefully be. And how can people reach you? So if investors want to learn about Brazil or founders want to reach out or e-commerce businesses want to know more, how should people reach out to you?
You can reach out to me via email. That's Rebecca with 2 C's at divibank.co.com. So Rebecca at divibank.co.
Perfect. Rebecca, thanks so much. Always a lot of fun.
Thank you for the invitation. Always a pleasure. Great conversation.
Yes. Thanks again for joining us. This podcast was hosted by me, Isaac Matzner. It was produced and edited by Maria Filmis. You can find more episodes on Spotify, Apple Podcast, and YouTube, as well as on our Substack page. We do love feedback, so please feel free to reach out to us on social media or via email at Brazil4beginners@gmail.com.